Daniel LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. And we have a stock today that is hot. It released its IPO yesterday, and the company Upstart is ready to take on these public markets, already up over 50% in the first 24 hours of trading. So the company IPO'd at $20 a share and is up over $34 today and looks to be going higher as retail investors as well as traders pile into this next generation company. So currently, this company is partnering. It's a fintech company partnering with banks to help banks better assess the credit worthiness of their retail consumers as far as loan credit worthiness goes. And this company has an AI program that is unmatched by any of the big banks' current softwares, and is currently working with big companies like Goldman Sachs, PIMCO, and Morgan Stanley to facilitate and originate some of these loans. And it's able to approve more than 27% more borrowers than high-quality traditional models, with a 16% lower average APR on these loans on average, and the loss rate is generally the same as these traditional models. So this is the next generation. As you know, FICO only has 5 components to it. It's an antiquated system. You know, these typical banks typically only have 8 to 15 different characteristics that they're looking at. The most sophisticated models have up to 30, but Upstart is looking at 1,600 different variables, and it continues to benefit from the data sets that get thrown at it. So let's take a look at the charts in this company and where it's headed after this hot IPO yesterday. So this is the parabolic chart of Upstart Holdings, and it's first roughly 24 hours of trading. It started trading yesterday at the public exchanges at right around 11:40, and its first 15 minutes is where I'm charting this Fibonacci retracement from the high right out of the gates, hitting right around 2660, coming down to 2284. And since then, it has just busted through all of these different fib levels that I had charted out here, and it seems to be settling out at this resistance level at roughly 3637 here, and this is up, roughly 17% for the day and about 75% over its IPO price yesterday. The company is still relatively reasonably valued. I know you were thinking you missed out on this. You know, you could have bought it at $22, $23 a share. You missed out on this massive upside, but I think this stock still has a good amount of long-term potential. We're looking at a price to sales of roughly 10 times what it will be earning this year in 2020, and the company has illustrated a compounded annual growth rate of over 75% in the last 3 years, and that's only going to continue moving forward as more companies, more banks adopt this software, this cloud-based software that is AI-driven and is really going to be, like I said, the future of assessing credit worthiness of retail customers for these banks. So this is a company that I would keep an eye on. I'm waiting personally for this to fall back down, hopefully to get it below $30 a share, but I think this stock could be headed towards the moon. Obviously, there's a lot of overzealous traders and retail investors out there that are driving this stock, and a lot of these fresh IPOs like DoorDash and Airbnb to, unsustainable highs. But I think Upstart is still at a equitable level, should I say, and I think it's worth keeping an eye on moving forward here. So Upstart is still a hot IPO. This company doesn't have the same interest as the big IPOs last week of DoorDash and Airbnb, because the stock is still teetering on large cap with a roughly $2.2 billion valuation at this moment. So this is a company that can still be under a lot of investors' radar, and like I said, could be worth putting a small position on to see where this stock heads in the coming weeks. So don't forget to check out Zacks.com/promo, where you can get a free look at our number one stocks, Zacks number one stocks by Kevin Matris. So check that out at Zacks.com/promo, and thanks for watching, guys.